Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. I'm Rapstein, and here we are, September 13th, 2011, just after 3 o'clock in the afternoon. Before I get anywhere in this, I want to invite you all to a live chat room that I hold on Wednesday, and I've moved my dates for the fall season to Wednesdays at 12:30 in the afternoon. The only way you get the invite is via an email. If you didn't get the invite yet, it means that you're not included in our mailing list for it. If you'd like to get one, well, you can call our staff, talk about it. It is free. 1-866-973-2077. You will see the number going through here from time to time. All right, let's talk about today. Stock market into the green. Nice day there. Europe managed to kick the can down the road further. They're up 109 points there, and still the euro is gaining on the Swiss franc. The dollar fell today about 58 points as Europe got its feet under it for a day or so, and that has helped prop up the gold a bit. Silver's also up on the day along with copper. Nothing stellar, but good action out of the metals. They're certainly not falling apart. So let's go to the gold chart. And to me, the most evident thing that went on is if I step back here, you can see all this sideways action that went on through the spring and summer. And the market got finally through the 1600 level, and from there it just launched itself. I was writing gold reports right here, and especially at the end of July where I was talking and saying it straight as can be that I thought the market could gain 5 to 10% by the end of the year. Take a look at what happened. From around 16 and a quarter, you're right now up to 1837. That alone is over a 10% gain, and now I'm getting even more bullish on the market because I think nothing is going to get resolved in Europe. I think Greece is going down in terms of their debt load. I think the EU is going to look for a way to let them out. I think they're better off for it. They can revalue their bonds and notes, and Europe needs time, and that's what I think is going on to get their banking system in order so it doesn't freeze up should Greece actually decide to default on its debt. That's my definition of down. That's all that it means. Their debt load is simply too great, and like big American corporations or banks that had to restructure, that country needs to restructure. I'm not certain that the same thing exists in Italy and Spain, but I think Greece, well, I think it's a different story. The gold market is winding itself up, as you can see right here, and it's stuck in a range of, let's call it, 1910 down to 1705, or $1,900 to $1,700 range. Whether it slips back and forth, don't know. When I put on the swing line study, which is this brown line, you're able to see things develop. I want to go back to the chart without it. This is a chart without the swing line study. This is it with it. In our software, you can take this study and apply it to ETFs, the stock market, the indexes, the cash markets, and the futures, obviously. And what I've got now is a pattern of lower highs, and with today's low at 1794.80, at least the one-day low until it's taken out, I've got a low that came down and did not take out the last break low of 1793.80. I want you to think of a giant apex forming right now. And that's what's going on. Should you break through 1793.80, I think you're going down in the market, maybe into the 1750 area. If you can clear 1889.10 until you take out this low again, I think possibly the $2,000 range is the next high, but there will be barriers in between. So let's discuss them. The 18-day average of closes, this red line that I'm putting on the chart, has been a very interesting barometer for the market. Theoretically, and this is what I teach, is trading theory as a strategy. You know, I was thinking of calling myself going forward a market strategist because that's really what I think I am. And if you look at the market and you use the theory that until you close under the 18-day average, the market isn't bearish, well, you did do that once here, and you immediately got thrown back up the other day. I find that fascinating in itself. The market is fighting a battle against that red line. How do I say that, and how do I prove it? Well, take today. the day before, the day before, the day before, and the day before. 5 days. The market has hit that number. It's gone under, it's gone above, but it's basically staying very close to it. The chart pattern is one then of higher lows and lower highs. That's not a trend. The swings, one way or the other, aren't there. Because you haven't made lower lows that I can work off of in a good way, I don't know what to do with it. This low at 1793.80 obviously took out that low. That meant that the last low, the last part of the chart, was bearish. Got that? While this low didn't take that out, we don't know that tomorrow it won't. We don't know that that's really a higher low yet, so we have to wait and see what tomorrow's going to have for us. Therefore, I'm very, very neutral in the market. The market seems to be holding that 18-day average of closes. If you break down, one of the support zones, the closest one on moving averages, is the 45-day that I use, and then the 100 is well below that. The Bollinger Band is where I got that 1750 support area. That's this number here, resistance 1904. What is the importance of these black bands? Well, they're an algorithm designed to keep the market trading within them 95% of the time. By design, the market can get over them 2.5% of the time or under them. It hasn't been under these bands, and I can't begin to tell you when. You got to go very far back. So the market has been much more bullish than bearish. And as the market's recently been hitting these bands, well, it tends to sell off, and it's been coming down to the 18-day average. Doesn't always have to, but it's what it's been doing recently, looking for support at that zone. I find that fascinating. I also find interesting that the market has developed nothing in the way of momentum. It is flat. You can see that as can be right here. So this is that wind-up period where the market's just grinding away like this. Think of a big spring. And if you can break out to the upside, away you go. If you take out 1793.80, you probably continue down to the 1750s. You're in the middle of no man's land right here. The silver is a little easier of a chart, at least, to analyze. You've got the definitive lower lows, and you've got the lower highs. Hasn't been back up to the 18-day average in a day or so now, actually in one day today. So I'd look for resistance at that number, and you'd have to take out 4278.5 in order to change the chart pattern. In the copper market, an even different picture. Definitively lower highs, and this is the chart that got down to a Bollinger Band, found its support. One of the things I was explaining to you, just the way I did in gold just now, was markets like to create layers, let's call them price levels, to work from. In this case, this market went sideways just about all of August, and all it did is pull back into that. It hasn't run away from it. It hasn't popped magically out of that. The bias is still bearish. 407 is still the problem area in the market, and you'd have to clear 415.95 to get bullish. Copper is also oversold. Not very good for anything that I can see on a technical picture right there. Crude oil. Crude's been leading the stock market. Yesterday I thought, going into the last 20 minutes of trade, half hour, whatever it was, the crude was up, the stock market was basically lower. That all changed in the last part of the trading day yesterday when the stocks caught on with the crude. So crude has been leading, in my opinion, the market higher. It's in a bullish pattern. This is the WTI. It is overbought, and it might be headed to the $91 area to find some area of resistance. The different market is the Brent. Brent is under pressure because you're now hearing OPEC talk about too much supply on the market, whatever. They haven't cut production yet, but they're throwing their eye out at it. But this is really the world grade of oil, not the WTI, which is American grade. This is the world grade, and it seems to be stuck at the 112 area as the WTI is coming up and the spread between the two of them narrow in again. Don't know even what that means, but until you take out 110.42, I give the bull idea here still a lot of merit. In the gasoline market, it's a bit bearish. The market has a pattern of certainly the lower and lows. It's come up. Now we've got the resistance at 291. I'm looking for further resistance on the first challenge of the 18-day average, but is it tradable? Well, if you sold the 279.25 area, let's figure it, you wouldn't be wrong until over 291. I don't know. I don't see the need to go out and risk almost $5,000 on a futures contract, and that's basically what that's saying. Here's a market that's also interesting, the 10-year note. And the 10-year note's been having troubles recently getting over this getting over the Bollinger Band. The support's back at 129.23.5, but if you get under the last break low of 129.23, you'll get a complete different chart pattern. It would be then one of a higher high and a lower low in an overbought market. It might mean that finally the market's ready to give up some ground, which we haven't seen in a long time, and get back to 128.15. I'm not betting on it, but I am also telling you at the same time an overbought condition.